Hi guys, my name is Walter Zanenko. I'm a manager in our digital assets practice, and joining me today is Nate Schubert, tax partner in our digital assets practice. We just wanted to put out a quick video to address some topics to consider heading into year end, specifically related to digital assets. So with that, I'll pass it over to you, Nate.
Hey, Walter, glad we could do this. Just before we get started here, quick disclaimer. Everything we talk about today really should be discussed with your tax advisor. Everyone has their own specific situation. And so please open up to them and let them know what your situations are.
Definitely. And before we start, I think we should address the elephant in the room. Obviously, FTX is going through bankruptcy. There's a lot of uncertainty in the market. Funds are involved. Individuals have funds locked in FTX and don't know when they'll ever get those back. So maybe we can start with some questions that you've been fielding for our clients.
Yeah, it's obviously a tough situation for a lot of people. First question they're asking is, what do we do? We got, these funds that's there. Can we take a loss on it? What's the remedy? And, in order to have a loss, you have to realize a transaction. And unfortunately, they're not able to sell those assets to create that realized loss. So next you'd kind of look at, are we expecting anything? And the fact that it's in bankruptcy right now, there is a presumed, probably expectation, hopefully they get something. And it really puts it in a tough situation. And so it's, again, one of those things that really needs to be discussed with your advisor of what they can do. Looking kind of a different side is from a startup perspective. There's a lot of startups that receive funding from, say, FTX Ventures or Alameda Research. And, what's going to happen with that funding and any implications there.
Yeah, and I wish we could say this is the only, failure in the crypto industry related to centralized exchanges, but it's definitely not. So this is an ever-evolving situation. It's been happening for the last few months. Anything else to add before we kind of jump into questions?
Yeah, I think you're kind of referring to Voyager and Celsius there. With that, I think it's just a good reminder for everyone, not your keys, not your coins. So, there's that inherent risk now, apparently, that, if you are keeping your assets on exchanges, that this is out there. It's not like a normal bank account with the FDIC insurance, for example. When they're discussing this with their advisor, make sure that you're looking at what basis you have. Just you're not able to take a loss for what the value is because you haven't necessarily paid taxes on all that. So there's lots of stuff that goes into it.
Thanks. And on a personal note, does this impact your perspective on crypto or on digital assets in general?
Well, it doesn't help the space, right? Yeah. It creates a lot of negative press and whatnot. It reminds people that, what's important is you should probably own, have those keys, if you will, to those assets. And it's probably going to pave the way for some regulation, which, I think a lot of people are actually looking for some regulation in this space. And that goes on the tax side as well.
Yep. And from my perspective, I think Satoshi created Bitcoin because he didn't want to trust an intermediary. And I think that's what we've seen in the marketplace in the last few months is these centralized exchanges failing for one reason or another. So, but on the topic of losses, is there anything else that our clients or customers should be considering heading into year end?
Yeah, I think, they should be looking at their overall tax picture. And if they have any net capital gains, they should definitely be considering if they should harvest any losses. So if there's any specific assets that they have, not just in crypto, actually, anything, should they sell those assets to generate or realize that loss to offset those gains? Something that's interesting is with stocks, you have the concern with wash sale rules, which is when you purchase a stock within 30 days after selling it for a loss. The IRS does not allow you to take that loss. That law is under the definition of securities, and the IRS actually has deemed crypto or cryptocurrency as property. So there might be an opportunity here for taxpayers' clients to realize some losses, reduce their taxable income this year, and if they like that asset, they can buy that again.
Sure. Yeah, and I'd like to highlight the fact that you said net capital gains, right? Because those losses are limited, correct?
Correct. Yeah, and a net negative, $3,000 a year is the amount that you can deduct on a return. So if you go beyond that net negative of $3,000, it does carry over to future years for future tax benefits.
Yeah, and that's for an individual, right?
Correct.
Got it. And you spoke about crypto being property. Maybe can we go through some other transactions specific to crypto and property transactions that would have a taxable effect?
Sure. This space has created a lot of new words or definitions, if you will, of different types of activities. One of those is airdrops, and that's receiving an asset. Generally, you might have to go and claim that asset, pay gas, for example, on Ethereum, and that asset becomes yours. If there is what they look at as ascension of wealth, and so if you have a value there to something, generally that will be a taxable event. And something else we definitely need to look at is constructive receipt. And so, were you actually able to claim that asset? Were you able to sell that asset? Things like that. And so we're talking about those items with our clients, about very specific transactions to determine whether or not that was a taxable event or not.
Yeah. And you said new terms, but I think some of these activities are, the same financial activity just wrapped up into a new term. I will say one that's definitely new, at least to me in the financial world, would be a hard fork. So maybe we could talk a little bit about that.
Yeah. So when the Ethereum merge happened, there could have been new hard forks, new assets created. If you are receiving those assets, again, goes down to constructive receipt and what did you have an ascension of wealth, and if so, it's probably a taxable event in those situations. Also just thinking of the Web 2 world interest, and then the Web 3 world is staking. Kind of thinking about the same thing as you're gaining value to something for providing that asset to someone else. And same thing, are you able to receive that asset? And something interesting with Ethereum here right now is that you actually can't pull those assets out. And so the question is, then do you have constructive receipt? And so it's definitely something, if you are doing that, if you are staking Ethereum and other assets as well, definitely talk about that with your tax advisor.
Other things that are still floating in the regulatory gray area would be liquidity pools, flash loans. Again, just important points that if you guys are doing those sorts of things, it's important to talk through how those are taxed or recognized from a tax perspective.
Yeah, good points.
Yeah, and one thing we've seen over and over again is that our clients are really having trouble keeping track of their lots, especially due to volume or complexity of transactions. Any thoughts there, Nate?
Yeah, you hit it on the head. It's tedious, right? Lots of transactions to keep track of, all at different prices, and so it's a lot to do. Generally, we recommend probably looking at a few softwares to help with that. But the software only gathers the data. From that, we have to look at which method we'd like to choose for using that basis in the year. And there's different methods you're allowed to use, and so we want to be as tax efficient as possible with that. And it's beyond just your crypto activity. We want to know what's your overall tax situation, and to help us select which basis makes sense, which method makes sense.
Yeah, there's a lot to unpack there. So keeping track, good books and records. It's almost like triple entry bookkeeping, right? So you're not only keeping track of how much ETH you spent, but when you sent out that ETH, what was your gain or loss? What was the age? So was it short-term, long-term? And what was the nature of the transaction so you can record it correctly for tax and possibly for GAAP if you're a company, right? So with that, another complex area that doesn't seem complex on the surface, but can get very difficult jumping in is NFTs. So let's just dive right in.
Yeah, it's definitely a buzzword. I think, maybe give or take 20 months ago or something like that, when Beeple sold his NFT. There's different parties involved with NFTs. Let me start there. So there's the minter, there might be the exchange that is helping facilitate a transaction, and a buyer or seller of the NFT. The minter, they're going to be a creator, so they're going to have some costs associated with creating that asset, that NFT. Could be just gas fees, but probably some other type of costs as well. And when they sell that NFT, it's probably ordinary income, right? They're generating that asset and they're selling it. And so that's what they're going to have. One big area there is that it's at the time of sale. That's the value received. And so if they hold on to, say, all that ETH and they mint it on a project, and if ETH drops in value, the IRS doesn't care that you sold ETH at 1,000 when the mint happened at 1,500. So it's really important to kind of look at that situation, and you may want to, not financial advice, but you may want to look at talking to your advisor about that and convert some to help cover your tax obligation.
Definitely, because those transactions don't always offset, right? So, you may have a capital transaction with an ordinary income transaction, and that disparity could leave you and your bank account very unhappy. So just...
Yeah, as it's two different buckets. And so as we alluded to earlier, the limit on capital losses in a given year is only $3,000. So $100,000 capital loss is not going to offset $100,000 of ordinary income.
Yep. Another aspect of NFTs, sorry to cut you off, is secondary sales and royalties. And that's sort of in the same vein of ordinary income, right?
Right. At the time of receipt. So again, back to that tedious tracking of all the volumes of activity there.
Sure. And that's for creators, right? So what are the other parties involved?
Yeah, so let's move to the purchaser and the sellers. When you buy an NFT, first off, that is a taxable event because you're using some form of crypto and it's being converted to something else. There's no like-kind exchange, if you will, for these assets. So there is a taxable event that occurs. And then you have to look at what are you buying? And who are you? Are you a business buying the NFT because it offers a subscription service? Are you an individual buying the NFT because you like the picture, holding it for artwork? And there's many different forms of NFTs. Some have some utility, if you will, and others are just, it just is that image or rights to something.
And then we get into, is it a collectible, right?
Correct. Yeah, there is a different tax rate for collectibles, 28% flat rate. So lots of things to discuss with your advisor on that. Because again, every NFT is different. Right? 721s they're all different, and many different projects out there.
And then lastly, to transact in NFTs, usually you need to use some kind of exchange, right? So what's their role and what are their tax implications?
Yeah, great question. So the exchange is going to be holding that asset, if you will, as a custodian. They don't own the asset, but they're helping facilitate that transaction with the contracts, smart contracts. They'll generally take a fee, for doing that, just like the creator generally has, royalty fees for receiving that. And so, from the exchange's perspective, they're generating income on volume. Right? They want those transactions, those sales. That's how they're generating their income, just like trader business activity.
And all this is just to say, these are the tax implications, right? So if an exchange or a company is transacting here, the GAAP, financial statement basis could be wildly different. I know you touched on subscriptions and, is it point in time versus overtime? And, the list goes on and on over recognition of revenue or different obligations there. So we won't dig into it now, but yeah, it gets complex.
Yeah, I think, just taking a step back, tax versus GAAP is one thing, but, there's very little regulation. We have a couple things from the IRS over many years that crypto has been around, and NFTs obviously haven't been around as long even. And, so some regulation, which might stem from other things that have been occurring, might come out. And, again, this kind of feels like every day is a little different and trying to catch up of what could be happening and to help advise our clients accordingly.
Sure. And if we could just zoom out for a second to, international tax and what those implications might be.
Yeah, this area became, very, very much looked at by the IRS maybe about a decade ago. And they really want to know, what your overall tax situation looks like. You got to report taxable income based on your worldwide income. And so they want to know if you have any foreign bank accounts or foreign financial assets, foreign financial accounts, or if you're investing a certain dollar amount into foreign companies. And so, maybe you have assets on a foreign exchange that you got maybe there a while ago. You probably need to talk with your advisor about whether or not that should be reported as a foreign bank account. Also, investment in foreign companies or startups. Again, you might have to be reporting those items. And failure report's pretty costly. It's a minimum $10,000 penalty for each form that was failure to be filed, per year. So it can really add up quickly.
Yeah. I think a central theme that, it's the word that we haven't said yet, but it's been implicit in everything we've said is there's a lot of risk here, right? So along with international, there's also, OFAC sanctions, right? And just interacting with protocols or individuals that might be sanctioned. And those penalties can wildly outweigh, the civil penalties, right?
Correct. Yeah.
Awesome. Well, Nate, awesome conversation. Look forward to doing it again. And everyone else on the call, look forward to your comments. So.